Hey everybody, it's Chuck Barone. Tuesday, October the 24th, 2023. It is good to be back, man. It has been since last Thursday. Missing Friday, got a crazy schedule. Missing yesterday, had to spend a little time in Laughlin yesterday, couldn't get to show up. So it's nice to be back today. Lots of fun stuff to talk about. Hope everybody had an awesome weekend. I sure did. But it is good to be back, and let's go over some stuff here, right? But before I get rolling, as always, let me take a second, welcome everybody to the show, and as always, again, thank you guys for your support. You guys showing up and watching these videos, keeps the show going. We appreciate you guys, we do. All right, so let's talk about these markets today. So we know there was the big shocker last week, and we got some data coming this week that could make these markets kind of spin the way they have been. But today was not much data. Today just earnings coming, and earnings coming in nicely. Yields spiking early in the day, coming back down, giving a boost to stocks. So the market rallied today. You have stocks across the board up today. Dow rising 204 points, sitting at 33,141. The NASDAQ up 121 points, 13,139, and the S&P up 30 points, 4,247. So across the board, stocks rising today, companies continuing to earn money. They came out today with this, we're going to get GDP on Thursday for the third quarter, and now they're saying it could be as high as more than 5%. Sure doesn't feel like it, especially if you're in real estate, but pretty astounding news. So, the economy chugging along and everybody hating it at the same time. Isn't that crazy, man? What a wild paradox where, the statistics say one thing, but everybody else's mood kind of says something else. I don't know, though. I guess, the more I read about it, they were saying that people personally feel like they're fine. Right? But they just feel like everybody else and everything else is crappy. That's just I don't know how that makes sense, but anyway, stocks up across the board today. The bond market today had a very strange day, just a flat day today, not much happening. Spiking early in the day, coming back down. The 10-year now sitting at 4.84%, basically flat, flirting above 5% earlier today. The 2-year sitting at 5.10, 5.10, up 3 basis points today, just kind of very narrow inversion now, still getting, narrower and narrower. You got, 26 basis points? So the yield curve flattening out. We'll see it, but a lot of the people on Wall Street feeling like the entire yield curve ultimately will be above 5%. We'll see how that pans out, but the yield curve is narrowing. I don't know what that means as far as, the yield curve recession indicator, but with the GDP numbers we're hearing, and jobs and all the other data we're getting, it might feel like a recession, especially if you're in real estate, but it apparently isn't. So the bond market kind of getting the lay of the land as far as what they're guessing the Fed's next move is going to be. The dollar today up back above 106, 106.25. Strong dollar. Not much competition for the dollar as far as the rest of the currencies right now. We're kind of ahead of a lot of the countries as far as the inflation fight and getting rates up. But, and of course, that's what's going to keep the dollar stronger than the rest of those currencies. Gold today, not much of a day for gold. Mixed numbers. You have gold up 40 cents today, gaining 40 cents, $1,972.70. Silver falling 5 cents, $22.91 for an ounce of silver. Still good, strong prices for gold and silver. And with this dollar where it is, really strong prices. When the dollar comes down, imagine the dollar index at 100, you're going to see those prices spike pretty good. Oil today continuing to come down $1.90, sitting at $83.59 for a barrel of West Texas Intermediate. I've been feeling like Oil wants to come down, but we know the Middle East thing spiked it back up. We were finally getting it back down, in the 70s, spiked it back up to around 90. Now it's continuing to trickle back down. I don't really feel as positive as I think that on the supply side of things, supply-demand side, I think prices want to come down. I think now the prices are higher just on the idea of the war widening and making a problem for, the oil business, the oil industry, transportation, and all the stuff that goes with it. So I think that's kind of keeping oil prices. I think they would be down further if there was no war in the Middle East. Bitcoin jumps today. Wow, big day for Bitcoin, plus $2,348, sitting at $33,907. Wow, go Bitcoin, man. The guys who've had faith in it are going to get rewarded pretty nicely here. It looks like the run is on. I have not seen or done much research to see what's leading this charge. I'm not sure if it's speculation more on these ETFs that are supposed to come, and when they will, this is going to look like a cheap price for Bitcoin because there's just going to be more demand for it. It's going to be easier for people to buy and sell Bitcoin through these ETFs. It's going to really create a surge. So maybe that's the speculation. I haven't seen it, but when I find the reason this is moving today, and I'm sure I'll hear from some of you guys in the comments. We'll be talking about that on a future show. All right, so let's talk about news you need today. Not much data coming in, but I do want to talk a little bit about real estate and housing prices, man. Housing prices just going crazy out of line, and it's not even really the price, it's the combination. We have high prices, median price around $450,000, and you have high rates. Mortgage rates between 7.5% and I hate to say the number 8%, but rates in there, prices high, rates high. It doesn't work. It does not work. But the industry's stuck with it because here you have the Federal Reserve tightening rates, bond yields spiking. Of course, we know what the federal government and the Treasury are doing to this bond market by flooding it with trillions of dollars of supply. So you have, rates not going to come down. I don't see that. At the same time, the price side, so ordinarily what would happen is prices would have to come down to kind of get it in, make it work as far as financing and everything that goes with buying a house. But because of our geniuses in government and the Federal Reserve, they've created a scenario where people that own houses, the vast majority of them have mortgages in the 3s. So they are unwilling to sell that house to buy another one with a mortgage in the 7s. Only if you would have to do that, right? If your work is moving you to another state, or there's some reason you have to sell and buy somewhere else, or even in your same place for some reason. That's the only reason people are selling houses right now. Even though people have tons of equity and could cash out for big numbers and would be able to sell their houses quickly because it's pretty much, if your house is under $500,000, you pretty much got a seller's market there. So the house is just unaffordable. So now, listen to this. It now costs over 50% more to buy a house than it does to rent the same house. So you want to buy it, it costs $450,000, you're going to put 10% down and finance it at 8%. You got a payment there of around $3,000. You're going to rent it, you got a payment there of around $2,000. How is this math going to work? And how are investors going to buy those properties and rent them when the payments are higher than the rent can be, right? So not a good thing for people though. So now even with a 10% down payment, okay, which let's face it, most people are not, coming in with $45,000 cash to buy a house unless they sold a house previously. But people who are saving money to buy their first house, for example, they're not coming in with $45,000 down typically. So, there's your first hurdle, right? But even with $45,000 or 10% down on a median priced house, okay, you still got a payment of $3,000 a month, approaching $3,000, or maybe more depending on how taxes and stuff like that are. If you got mortgage insurance. Now, the average household income in the United States right now is about $74,000. I think the number is around $74K. You need now, in a lot of places in this country, more than $100K in household income to qualify for a mortgage on a median priced house. Okay? So for example, $450,000 house, you're putting down, like I was saying, 10%, so you're putting $45,000 down. You got a 405 loan amount, bada bing, bada boom, your payment. You got to have a little pretty sizable income to qualify. Because most people have other debt that's going to get factored in, car payments and credit cards and student loans and the rest of it. So how the hell is, Charlie Schmuckatelli out there going to buy his first house? Imagine this. $45,000 just to get in the game. And that's not even counting your closing costs. After you fork over your $45,000, you got a $3,000 a month payment. It's crazy. I've done pretty good in my day and still do okay. I could not imagine having to face a $3,000 a month mortgage payment every month. It's crazy. Now, correction on housing prices, especially at these rates, is long overdue. However, it's just not going to happen. It's not going to happen because we have this Fed-induced problem with 3% mortgages. So no one wants to sell. When you have very limited supply and big demand for that supply, it keeps prices high. And how on earth is that going to correct itself without rates coming down? It's not. So it's going to be, this year's going to probably finish pretty tough for real estate. And until the Fed starts lowering rates, if you can get mortgages, from where they are into the fives, maybe you got a shot for some of these first-time buyers getting in this market to have a payment they can afford. But until then, man, it's just going to be real estate in a giant slump. And it's going to be the weird one because prices are not going to come down like they ordinarily would. And you're going to have this scenario of, limited supply, demand for that supply, but you're going to have, because of the rates and the payments, a lot of people on the sidelines who want to buy but are unable to. So it's just crazy how it worked for these poor buyers. First, they couldn't get in because people were paying, $25,000 more than the house was worth to buy the house. So they couldn't get it. But they could have. But if the house was selling at what it's supposed to, list price, normal price, they could buy a house and afford the payment. But houses weren't selling at list price; they were selling way above them. So people were locked out. Once that ended, rates started spiking, so they got shut out. Now they don't have to worry about paying the premium anymore, but they're shut out because they can't afford the payment. It's just been crazy, crazy, crazy market, man. This week we're going to get GDP. Can you see? Now they're saying the Fed, the Fed tracker, the Atlanta GDP Now tracker, saying 4.5% third quarter GDP growth. Doesn't feel like it. Some estimates as high as 5.7 GDP growth last quarter. Guys, what happens now to the Fed and inflation? If the economy is growing at that pace, and the jobs number is coming the same day on Thursday, and that jobs number comes in hot, well, the end of this week is going to be fascinating, because if those numbers come in hot, the scale is getting piled up with negative weight now. More bad for the Fed at least, and rates. They're trying to calm the economy down, to bring prices down, not working. They don't really want to raise rates any higher. You can tell they're scared shitless of that. So they're kind of like mealy-mouthed. Well, the bond market might take care of that for us, and they're trying to, but it's going to be fascinating this week. So we will be for sure looking out on that. And this week could finish pretty poorly. On Thursday, we'll get GDP and we'll get jobs. On Friday, we'll get consumer spending and consumer income numbers. Depending on how those go, guys, could be fascinating finish. Anyway, good to be back. Love you guys and appreciate you. If you can, hit the like button. Hit me up with your questions and comments. We'll be back tomorrow to bring you guys the news you need. We appreciate you. Till then, guys, take care. Thanks.